Hi everybody, this is Osprey from MyChartCoach.com, and in this video we're going to take a look at the cannabis sector. So yeah, let's look at CGC here first, closed down 14%. So it is hitting 31 on RSI, and this is a level that it did bounce off of in the past. So keep an eye on it, getting down here at 30, maybe below 30 on RSI. That would be a good setup for a technical bounce. At 2.82 on Fasto, it is at extreme oversold levels. As you can see here, it normally doesn't stay below 20 for very long, so it should have a technical bounce here at some point. It's setting up. It did fill a gap here. There was a gap between back here in August between high of day on this candle and low of day on the 20th, and so that gap did fill with the red candle. You can see that the drop below of 34 filled the gap. Now the next target below would be the 200-day simple moving average here at 31.32. Look for a technical bounce off that level. That level really needs to hold. If it failed to hold, it could drop further. There is another gap between high of day on the 14th and low of day on the 15th, and so a drop down to 29 would bring it to the top of the gap, of the next unfilled gap. And the top of the gap many times is a support level. And so as you can see here on this CGC weekly chart, you can see here how it's broken down, and it's dropped below the middle Bollinger Band, which is the dotted purple line this week, currently at 38.14. It needs to hold that level in order to keep this uptrend going. Now it's headed, it looks like, for the 50-week moving average at 29.32. And so if that level was tested, that would be a great level for a technical bounce. If that level were to break, the downside risk would be a drop down here to the 100-week moving average at 1862. That lines up with this ascending support line in the bigger channel, but there is a tighter channel here that lines up with 35 right now with these candles in this tighter channel, and so that's been for the pattern for 2018 and most of 2017, and so yeah, 35 would be the key level to get back above. It needs to get back above 35 to head higher, but right now keep an eye on 29. It looks like it could have a technical bounce off of that level. Now let's take a look at TLRY. TLRY is and before 29, 31 is going to be the next target to get bounce off of 31. The 200-day simple moving average is a major support level. There should be buyers at that level. Keep in mind, it will not be able to get a sustained bounce going until it gets above EMA 4. That's the pink line at 37. At that level, it continues to be resistance. That will be the sell zone and the bounce. It has to get above that level and above the gold line, the 100-day simple moving average, basically at 38 there, in order to get a sustained bounce going. If they remain resistance, they will signal more. They will become more downside risk. Signal more downside risk. The gap here, keep in mind, the bottom of the gap will turn into a resistance level. So it's going to have to break through 34 to head higher. Okay, so on the TLRY chart over here, we're going to look at TLRY now. Yeah, this is a stock is pulling back as well, down 16%. It had a drop below RSI here on back when it had the climax spike. You can see here it had a climax spike back in September. That red or black spinning top, that signaled a lock in gains. Okay, that was a big signal along with the climax spike. You can see how it had an increasing volume pattern, and that all signaled a lock in gains. It never got back up to those levels. Now it has a decreasing volume pattern, and as you can see, there hasn't been a huge volume lately. It's just been a lack of buyers. They've been drifting it lower. There was heavy buying leading all the way up to the climax spike, and then now the volume has faded, the buyers have left, and it's been drifting lower. If you could look up here, the drop below 70 in RSI, that was a sell signal. Below 80 on Fasto, that was a sell signal. At 38.58, it still has a lot of room to drop before it hits that 30 oversold level. That this isn't as oversold as Canopy Growth. Fasto is signaling temporarily oversold at 2.86. There was a bearish crossover here on ADX. Check out the red line, minus DI, crossed over the green line, plus DI. That's a signal the bears are starting to heat up here. The chart's starting to break down. There was the close below the 50-day simple moving average, the green line there, back last week. And so that close below did signal downside risk. and so you had the close below right here, and so now you know, that level has turned into resistance. That's currently at 111.59. It needs to get back above that 50-day simple moving average. If that remains resistance, the share price is going to continue consolidating. There was a close today below the September 24th closing price. That level really needed to hold. Now it looks like it could possibly head down here and fill gap number 4. That there is, you know, there was 6 gaps in the chart. There was 1, 2, 3, 4, 5 gaps, and then a 6th gap up here. That gap filled. The 5th gap filled as well, and then gaps 1 through 4 here are unfilled. And so if the share price came down here to just below 70, that would fill the gap. Around 67, 68, that would fill the gap down here. So if EMA 4 at 104, the pink line, remains resistance, and TLRY continues the downtrend that started here on the 22nd with the close below the middle Bollinger Band, then this 60s, you know, high 60 level will be the target. You know, many times a downward gap fill will be a setup for a technical bounce. So look for a technical bounce off that level if that happens. It's not going to be able to head higher until it gets above EMA 4 at 104 and above the 50-day simple moving average at 111. If those levels are resistance, it's going to signal more downside risk. Now take a look here at the TLRY 15-minute chart. I wanted to show you this. This is a chart from back on the 16th, and yeah, you can see it's oversold here on RSI and Fasto. And yeah, this chart was posted in a video that I did here, showing that you know, it had formed the black candle on the chart up here. You know, that was the opening candle on the 16th, and that black candle signaled the lock-in gains. It had filled the jar back over here, this big October jar, and that was a climax event, and it pulled back. You can see the climax spike down here, and so if you were to have locked in gains on this black candle signal that we follow, you could see you locked them in at the high, and the share price has been cut in half. You know, it's gone from 180 down to 90. Okay, in short amount of time. And so yeah, you know, congrats to everybody that were following the candles and locked in gains on the black candle. And if you didn't know to lock them in, now you do. Yeah, don't mess around with the black candle during an uptrend, especially after a gap up open above the upper Bollinger Band. So now it has to, you know, you can see the chart is pushing really hard to the downside. It's going to need to get above the EMAs 4 and 8 to get a bounce going. Okay, it has to get above the middle Bollinger Band, currently at 95.42, and above the 50 simple moving average at 103 to get a sustained bounce going. As you can see on the last bounce, it tried to get above the 100 simple moving average. That's at 107, and that's where it topped out at. Right now, if you're playing the bounce, you know, you have to exit when it hits these moving averages if it fails to break, because that signals more downside risk. Okay, let's look at Cronus Group. Okay, it closed down 12% today. They're just really hammering the cannabis sector. It's at 33 right here on RSI, so it's getting near that oversold level. You can see here in the past, it bounced off of this, you know, this same zone, this 33, 32 zone. And so somewhere between 30 and 33 here, it should get a technical bounce. This is what it's done historically over the past year. You know, unless this is going to go super deep and heavily bearish for an extended period of time, it should get at least a technical bounce here coming up. It does have Fasto at 3.13, so it is very oversold. You have minus DI here at 31, and so as you can see here, this is a level where it's only been above this level once during the last year, and that's when it came down here and made this low, made the low. So it's hitting some you know, some frothy levels on these indicators. It looks like it could come down here and or overextended. You know, the indicators are signaling it's getting close to that overbought zone where a technical bounce could be coming soon. It filled this gap over here from August between these two candles. It was a micro gap, a very small gap, but it filled the gap, and it was holding the bottom of the gap level until today, and that level finally broke along with the 200-day simple moving average at 785. You know, that broke on Friday with the close below. It just struggled to hold that level, and it's heading lower. And so now the key target is this blue line. That's the 300-day simple moving average at 636. Look for a technical bounce off of that level. That level should hold. I mean, that's a huge support level. You know, the algorithm should be buying off that level. If they don't, and the buyers don't show up, then you have this support zone from down here. You know, it's this August, May, April support zone that's down here around 550. You know, this 550 zone, and so that would be where it could possibly drop if it broke below that 300-day simple moving average. So we'll keep an eye on that level though tomorrow and see if it can get a technical bounce. Once again, this is a chart from back on the 16th. The stocks in the cannabis sector, you know, they trade in unison, and so CRON Group formed the black candle as well. And so, you know, I showed you this chart. It's hard to read because I want to show you how the jar filled. It had a high here, and then it came all the way down, and then it came back up. And when what we call filling the jar, you see it filled the jar with these levels. Many times the jar fill, you know, it hit all the way up here. The jar fill is a climax event. And so what happens is the top of the jar becomes what we call a lid, and it has to break above that level. If it's bumping up that level, it's stuck in the jar and it's going to pull back down. And so that's unfortunately what happened here. The jar filled. It had the black candle. Notice it had the climax spike. See the big volume spike, the big push up, and then you have the giant volume spike with the black candle forming above the upper Bollinger Band during an uptrend after a gap up open. I know it sounds like a freaking broken record, but that's how you make money, is trying to figure out the patterns, and the patterns repeat. And so you just have to follow the same game plan every time you see the same setups, because what happens is the ticker symbols change, but the patterns never do. You know, you would think this was the same stock, you know, but it's not. And so that's why you have to follow the patterns. And so you have to trade the chart and not the heart. And a lot of people were in love with the cannabis sectors, and I hate to see that people lost money and held during the big drop. And that's just never fun. You can see now they're dropping it lower on very light volume compared to the volume that they took it up with. And so now we're looking for a technical bounce. You know, the cannabis sector still has a lot of upside potential in the long run. It's just this was a big shakeout, which created a big trading opportunity. People made a lot of money on puts on the way down. You know, the stocks that I'm showing in this video all trade options, and you know, they had, except for ACB here that I'm showing you now, but CRON Group, TLRY, Canopy Growth, and soon Aurora Cannabis, if they don't already. I didn't check this week to see if they started the options, but yeah, they just started trading and on the New York Stock Exchange, and unfortunately they didn't have the big you know, they didn't get the big run up afterwards. And so yeah, unfortunately it got sold off. You know, it was bad timing with the cannabis legalization and the selling the news. As you can see here, it was above 70 on RSI, and then now it's down to the 30 level. And so that's the thing, is once it gets to the 30 level, below 30, that's going to be the buy zone. And so as you can see historically, once it gets below that level, okay, look where this lines up on the chart. That was the very bottom down here, right? And that's when they pushed it down. And so what we do with charting is we look at what's happened in the past, and then we try to anticipate history repeating. And so what you're doing is you're anticipating history repeating, but you're keeping an eye out for a change in trend. And so historically, when you know, it gets down here, it tries to bounce, and so you're getting near a bottom here. But you know, we'll just have to see what happens. If you look back here, you know, this was close to the bottom for a technical bounce. And so yeah, we're going to see if you know, if this stays completely pegged down here, or if they can get a nice snapback rally. The charts are definitely still very bearish here with Fasto down here at 2.6. You can see this has stayed below 20 for an extended period of time, a couple times in the last year. There was a crossover on ADX, so now you have minus DI above ADX, and so that's a signal that the bears are taking over, similar to right here. You could see when that happened, look at the drop that happened, another crossover right here, and then you could see the the drop over here that happened after that crossover. So it's never good when the red line crosses over the black line if you're a bull. It's coming down now, and so this had the jar fill, and so we were just talking about the jar fill. It made a high over here in January. This is on the daily chart, and it came all the way down, and then made a bottom in August, and then came all the way back up and filled the jar. And filling the jar was a climax event. You know, it failed to get above the top of the jar level. This $12 level, I put out a lot of alerts on it that it needed to, once that level broke, it needed to stay above that level. And so once it failed to, you know, that was signaling that it could be consolidating. And then you had the high close here on the what is this, on the 15th. And so that was the other key level that it needed to stay above, 1175. And so basically, you know, the red flag too. Okay, so it was this unfilled gap. So when it was up here, you had the gap that was unfilled between these two levels, between high of day on this candle and low of day, and gaps always get filled. And so there were a lot of alerts put out about that filling that 1050 gap, and so it did come back. Almost filled it on the first day, filled it on the second day, but that signaled the chart was breaking down. And then if you didn't get out on the breakdown up here, that middle Bollinger Band was your clue to get out. It needed to hold the middle Bollinger Band at 934, and that level ended up breaking, you know, with this big red candle. And so there were a lot of red flags up here, but that were telling you that, okay, it's you know, it's possibly going to consolidate. And that, but you know, if you didn't lock in some gains up there, that break below the middle Bollinger Band was your next big clue. And so it came all the way down here. You know, this big gap between high of day on this candle and low of day on this candle, that gap filled today. You can see the big red candle went through that green line, and so that did fill a gap. So now we have a downward gap fill event, and so many times that is a setup for a technical bounce. It's also just dropped below the 300-day simple moving average at 631, and so that's a key support level. So we got to see if it can you know, get a technical bounce now. It's going to have to get back above the bottom of the gap level, which is at 651, and back above the 300-day simple moving average. If they remain resistance, it can head lower. Now the downside risk is the second gap over here. You see the gap down here, a drop down to $5 would fill that second gap. You know, I discussed these gaps, you know, multiple times when this took off. That yeah, everything was great, but I wish there weren't these gaps down here, because gaps do get filled. And as you can see, this gap got filled, and then now this gap has potential to filling. If Aurora Cannabis comes down here and hits $5 and fills that gap, that would be a very good buying opportunity. So yeah, keep that in mind. That's, I mean, this is a very solid company that should be around for a long time, and yeah, trading back down at $5. That's a very interesting entry point. So yeah, keep your eye. You know, one person's trash is another person's treasure, and yeah, these things got really beaten down. We just have to see if they can find support and get a reversal going. As you can see here, this has the echo theory type of setup here, where you know, it's a mirror image almost. It took 1, 2, 3, 4, 5 months for this to play out to the downside, and then it took the 1, 2, 3, 4, you know, nearly 5 months for it to play back up to the upside, and then repeat the pattern for the you know, trading up and then down. So it's like, so this whole cycle has been you know, nearly completed. As you can see, at the start of this run, there was some sideways consolidation, and so is that what's going to happen here now that it's pulled back? Is there going to be some sideways consolidation here coming up off of support? We'll just have to see. This whole pattern for 2018 now is about played out, and a new pattern should emerge within the next month or so. Keep in mind, historically, December and January, you know, are the best months of year for the marijuana sector. As you can see back here in December and January, that's when it really took off and got running. Okay, thank you very much for viewing this video. Oh wait, no, let's look here at the 15-minute chart. Yeah, the RORA Cannabis 15-minute chart. You can see it's above 30 on our side, so it's starting to trying to heat up and find support. You know, once again, this is the same day. This is the 16th. This is when this chart was made, and you can see it had the black candle that signaled to lock in gains. Yeah, it just had the same setup as the other charts. As you can see here, I put out some warnings about this unfilled gap. You could see the lower wick on this candle didn't quite fill this gap. Unfortunately, it had a gap down open, and then it came back up, and it did fill the gap. And then notice how the top of the gap level here, that this green line, 1075, it turned into resistance. It never was able to get back above the top of the gap. So gaps are really important in charts. You know, they become support, they become resistance. You have to know how to trade them. And so this turned into a big resistance level, and that was another red flag, you know, that signaled the chart was breaking down. So if you had charted the gap scenario and then saw that on this 15-minute chart, that would have been another clue that you wanted to head to the sidelines, you know. And yeah. So yeah, just keep in mind that the patterns never change, right? But the ticker symbols do, right? Okay, cool. Thanks. If you want to learn more about stuff like that, and yeah, you're interested in charts and technical analysis, please come check out the chat. All right, thank you.